Today's topic is Bitcoin to blockchain. In this episode, we'll be looking at the technology behind both these Bitcoins as well as blockchains, and the possible applications in the GCC region, and the current projects that are taking place in the GCC region. Questions can be asked anytime during the course of the webinar, and it will be addressed at the end of the presentation. Recordings of the same will be sent in a day or two. It will also be uploaded on Marmol's website and its YouTube channel. Alternatively, you can also email these questions to me. My email address is rkhanna@emarmo.com. I'll spell it out for you. It's rkhanna@e-marmore.com. Bitcoins were first introduced in 2008 by an anonymous programmer called Satoshi Nakamoto. The Bitcoin software was further open sourced in 2009. The most appealing aspect of Bitcoins was the fact that they let users transfer Bitcoins among themselves without the use of an intermediary. A blockchain. So how are Bitcoins and blockchain related? Well, a blockchain is nothing but a ledger of transactions that takes place on the Bitcoin network. It records each and every transaction that takes place on the Bitcoin network. So how does it do it? Well, each block will contain a timestamp and a link to the previous block. So they cannot be altered retroactively. By storing data across its network, the blockchain eliminates the risks that comes along with data being held centrally. Well, this slide explains how the blockchain model differs from the traditional exchange model. As you see, the need for a clearinghouse is eliminated in the blockchain model. Transactions that happens on the network are verified by the network themselves, and when approved as valid, they are added to the block. Well, there are a number of blockchains. The blockchain associated with Bitcoin remain the most popular one. All of the blockchain transactions get recorded on the blockchain, and that too without the use of a central authority. So for example, when X sends a certain number of Bitcoins to Y, the transaction is broadcasted to the entire network using the Bitcoin software. The software then validates the transaction and adds it to the block. Despite the popularity that Bitcoin enjoys among its community, there are also a lot of shortcomings. The main problem being they are too volatile and have varied greatly in the past couple of years. Consumers still prefer the security of the hard cash. And there were also instances of Bitcoin exchanges being hacked. For example, Mt. Gox, one of the largest Bitcoin exchanges, that went bankrupt in 2014 because of one such hacks. Well, this showed the vulnerability of certain Bitcoin exchanges. Even though a Bitcoin network might be secure, the wallets and the exchanges that host these Bitcoins might not necessarily be so. And the problem was a little more complicated because of the anonymous nature of Bitcoins. They were not able to trace the origin of the hack. As a result, the price plummeted, but currently it trades around $900. So you can look at the volatility over there. Well, we might be wondering how such a fledgling technology has caught the attention of bankers worldwide. Well, the bankers are not mostly interested in Bitcoins. Instead, they are interested in the underlying technology called blockchains. Banks around the world have come up together. R3. There is a firm called R3, a financial innovation firm that has brought together close to 80 of the global financial institutions to design and develop advanced distributed ledger technologies for making this blockchain mainstream. Some of the participants in the program include Barclays, Commonwealth Bank of Australia, Credit Suisse, Royal Bank of Scotland, and UBS. The major issues that banks face is higher regulatory charges, increased capital requirements, and the low interest rate environment around the world has squeezed their margins. So they are looking at every nook and corner to increase their profit margins, and they see blockchain as one of the areas that could help them reduce their fixed costs to a great extent. One possible application is cross-border fund transfers. The current model takes around 2 to 3 working days, and each of the party involved receives a cut of the transaction, which increases the end cost. So Visa, one of the largest card companies in the world, it has looked at this problem, and it's currently running a prototype application called B2B Connect that it has introduced with the help of 30 banks that operate in 10 countries. The objective of this prototype is to help businesses send money like they send emails, making the transaction more simpler and cost effective. So other than the R3 consortium, there are also other banks that are working on their own prototypes using blockchain technology. For example, IBM is working with India's SBI Securities on a bond trading system based out of blockchain. Standard Chartered and Siam Commercial Bank are exploring the option of using blockchain for making international payments much faster. Kazakhstan's central bank is actually looking at the option of using blockchain for short-term security deals. India's Kotak Mahindra Bank is looking to for introducing a blockchain for its cross-border remittances. There are also a lot of other programs and pilot projects that are taking place in the GCC region. The Dubai Future Foundation has been at the forefront of this technology development. Recently, in December 2016, it introduced a series of pilot projects on the following areas: health records, managing conflict diamonds, title transfers, tourism engagement, improved shipping, etc. Well, the major application is in healthcare is preventing manual errors that seep in when a person transfers his records from one hospital to another. And another important aspect is increasing security for patient records. Recently reading the news about ransomware attacks in hospitals whereby patients' information is withheld by an attacker, and he doesn't release the information that is needed for the treatment until he is paid the ransom. So all these kind of ransomware attacks can very well be avoided by using blockchain. Dubai Telecom is currently partnering in running one such pilot program along with an Estonian software company called Guard Time. Another usage is Dubai Multi-Commodities Center that is looking at using blockchain technology to authenticate and transfer Kimberley certificates. The Kimberley certificates are diamond authentication certificates that states that the diamond that is being traded is not from a conflict zone. Another major area of application is usage of blockchain for conducting an audit trail of insurance claims, purchasing and approval of inventory. And there's one Singapore-based startup has even introduced a proof of concept for transferring antiques and other precious items in the GCC. So digital wills, for example, is a great area, mainly because a lot of controversies and legal issues arises because uh, of a family patriarch not writing down a will or something like that. So what happens is digital wills will help in smooth transition of business and other operations. Instead of complex legal documents, digital tokens would determine the ownership of the title. Dubai is also planning to introduce loyalty points program on based on the blockchain network. So what this program intends to do is, let's say a person visits most famous part of Dubai. He will be credited certain loyalty points. That loyalty points could then be utilized elsewhere, which basically serves as an incentive for the person to make more such visits to Dubai. Trade finance is a very disjointed area. Globally, there has been a lot of initiatives that is looking at trying to streamline the trade finance process. In this regard, IBM and Global Blockchain Council, one of the flagship projects of Dubai, they both are working with each other to deliver a viable solution for trade finance. The complexity in trade finance is mainly because of the number of parties that are involved. For example, there is the local port and its authorities that are involved in the transaction. There's a local bank that funds the exporter or the importer. There's a logistic companies. There's a courier company. There's a shipping company, and there's an international bank that funds the exporter or the importer. So most of these transactions still requires manual inspection and checks in order to ensure that all of the transactions are in order and they don't pose any delays. So blockchain can help in reducing the manual inspection, and instead they can digitally authenticate these processes, and which will really enhance the supply chain, as well as reduce the time involved in that's being spent with all this manual inspection. So there are three areas where we see the blockchain could be applied in the GCC region. One is land registration, the other one is remittances, and cyber security. In terms of remittances, the traditional wire or the check transfer, or even the SWIFT method, they take around 2 to 3 days to complete. So shifting to a blockchain-based model will reduce that time to minutes instead of days. Next is real estate transactions. Abu Dhabi and Dubai both are the most happening places for real estate in the GCC region, and but still the registration process takes place through the traditional paper-based method. So paperwork could be eliminated if the real estate transactions can be digitized, and Dubai has already started its initiative of securing its government documents using blockchain by 2020. Remittances, GCC region is a huge region for expats, and as a result, close to $98 billion is sent out as remittances each year. But the cost of this sending funds abroad ranges around 5%, which can definitely be brought down by shifting to blockchain-based payment system, which will mostly reduce the use of an intermediary, and it will result in faster remittance time and reduced cost. And as we previously saw, an increasing digital economy needs to take into consideration the cyber security risk that is involved. Ransomware, as we previously saw, is a great problem. what happens is what happens in a ransomware attack is that the attacker hacks a computer and he locks he locks it using advanced techniques, and he will not which encrypts the data, and you need a decryption key from the hacker to once again get back the control of your computer, so for which you will have to pay a certain amount of money. So all this can be avoided in case if we shift to a blockchain based technology. With that, we come to the end of the presentation. We have a question from one of our listeners. Will remittance industry get impacted in a big way due to blockchain? Yes, definitely. Remittance industry is one of the industries that will be most affected if the blockchain technology goes mainstream. Mainly because remittance industry thrives on commissions that are generated when people transfer funds from one country to another. That ranges anywhere from, in case of UAE, it ranges from 10 AED to 20 AED. So when the requirement for an intermediary, such an intermediary is eliminated, and people can send their funds directly to the receiver, that's really going to impact the industry in a big way. That's why we even have money transfer agents themselves have invested in blockchain technologies. One example is of that is Western Union. They have invested in developing their own blockchain technologies in order to counter any such impacts. We also have another question from one of our listeners. Sorry. Will current cybersecurity issues make adoption of blockchains more rapid? Yes, we have seen evidences of more companies focusing on blockchain as an alternative to the current technologies. The the appeal of blockchain technology in making the network more secure is the distributed. The blockchain is based on a distributed network rather than a centralized. Rather than a centralized network that we all have seen for so many years. So what this happens is a hacker can easily attack when the data is centralized, but not when it's distributed throughout. So that's what makes the blockchain technology even more appealing for securing your network. So yes, it is making blockchain adoption more rapid. With that, we come to the end of the presentation. Thank you very much.